Special board meeting to order at the Madison Parish School Board at 600 Value Drive, Tallulah, Louisiana, 5:30 on February 9th. We're fixing to have our invocation or silent prayer, and I'd just like to ask everybody to remember Reverend Fountain's wife. They are home, but they have a long road ahead of them, so just a moment of silent prayer. Amen. If you'll stand with me, we'll do the pledge.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Roll call of the board members. We have District 1, District 2, present, District 3, District 4, District 5, District 6, District 7, and District 8. Present. Our first, I like Ms. Libby has looked at a reorganization, so we're going to have grouped together items that we do not have to vote on, and these are just like presentations and reports and things, and then down at the bottom are action items that we will vote on, and that will help keep us straight, like, do we vote on this, do we not vote on this? So that's how the new layout is going, so we'll work through this together. So item 2.1 is to receive the 23-24, please have this is 23-24 audit report from Holder, Slavin and Company.
Good evening, and thank you. I handed out the audit report, that's the blue packet that's in front of you all, but I also handed out a short presentation. It's this little snapshot here. Rather than going through a full audit packet, we're just going to hit some of the highlights in this information. So as you said, this is the 2024 audit for your junior end. Typically that's due by December 31st of this year, of the June 30th, December 31st of 2024. Obviously, we're here in 26 issuing that report. The information in the presentation packet is just going to summarize what is in there. The first page of the packet talks about management's responsibilities, our responsibilities, what we did, how we did it, the conclusions that.
Can you turn your mic up, please?
I can try. Can you hear me better? Okay. It talks about what we did, management's responsibilities, our responsibilities, as well as the conclusions that we reached and what we noted throughout the course of the audit. We issued a qualified opinion on the financial statements, primarily on the general fund and the financial statements as a whole. That qualified opinion means that we were able to perform most of our audit procedures, but some of the documentation or controls was not sufficient for us to express a fair opinion on all that information. So we struggled to get a little bit of the information accurately tied down and reasonable for the general fund, therefore the qualification. The other funds that we tested, we were able to express an unmodified opinion on those. We looked at your federal awards. You did receive good compliance on those. So the ones that we tested, you were able to comply with the federal rules and regulations. We did note a couple of exceptions, a couple of issues with those. On this first page, you'll see we had several internal control deficiencies, as well as non-compliances, and a few of the federal audit findings. And that's going to be on page 1 of the summary. The subsequent pages of this are going to have those listed out, again, in a little bit more detail than what we've got in here. There were about 20 findings total this year. About half of those were prior year findings that were repeated. Some of them were obviously new. Y'all can look at that list. I'll give you just a second to see the summary, and we can go through 1 or 2 of them if you've got specific questions, or we can flip to the back after we go through the financials and look at all of them. On page 2 of the presentation, this is a snapshot of just your general fund. As y'all are aware, y'all have your general fund and your special revenue funds. Your special revenue funds are typically grant-driven or dedicated resource-driven, so of spending power in those. When you get Title I money, you can only spend it on Title I. Your general fund you can use for operations, overflow, or whatever the case may be. So it's critical that we focus on that. And I want to hit a few of the highlights and emphasize a few matters here. Your total revenue came in at $13.4 million. Ad valorem taxes was 1.7. Sales tax was, 1.1. Sales tax was 1.7. Your MOP money, your largest source, came in at $8.6 million, and all of your other revenue was 1.8. You spent $11 million on instructional expenditures, as well as 1.7 on general administration, and you can see down the line bringing you total expenditures of $17.4 million. That left you a deficit in the general fund of about $4 million. Prior to this year, y'all had about $4.3 million in available fund balance, which was a reasonable number based on your expenditures. Because of that deficiency that y'all ran into, you're left with an ending fund balance of about $296,000. That $296,000 is what's carrying over to the next year, so we're looking at the 24-25 beginning number, and that basically means how much available resources you would have to spend. As you can see, y'all spent a deficit of $4 million, overspent by $4 million. Going forward, that's just not sustainable, especially with the $200,000 balance. Any emergency, any repair, any issue that comes up, you are going to absorb that, and obviously we're well past the couple of months that we usually look at. That $296,000 is going to disappear very, very quickly. That is the financial snapshot of the general fund for the 2024 year. The next pages of the presentation are kind of the summary of all of the findings that we did. We listed them out. We started listing the repeat findings, and then we broke down the new findings. We just listed the condition, basically what we saw and what the recommendation was. As I said, there are about 20 of them, with many of them being repeat. If there are specific ones that y'all would like me to kind of dive into, I'd be happy to, as opposed to going through all 20 of them.
So, on the second one, I just underlined where it says certain payroll changes were processed without sufficient documented supervisory approval. What do you mean by documented supervisory approval?
So when we're looking at anything for an audit, we look for what we consider an audit trail. That means that changes were being made to the payroll, the salary amount, steps, level of experience, and we saw adequate documentation of when y'all adopted it, or somebody was moved up a step, or got stipend pay, whatever the case may be. Those specific things were either noted in the minutes, signed off on by a supervisor, somebody within the finance department. In some of those instances, we were not able to be satisfied as auditors that it was properly approved.
So that there were payroll changes or stipends or whatever being given and done without the proper supervisory paper trail.
Correct.
I'm going to ask questions. So on page 4, where it says current year, is that the 25-26 year?
No, ma'am. That is, so when we say current year, it's the year we are auditing. So the prior year findings happened previous to and were carried into the year we audited in 23-24.
Okay.
The current year findings, those were newly discovered as we performed our procedures in the 23.
Okay, so it's just the year you're doing.
Correct.
So the first one, again, says, let's see, we identified multiple journal entries recorded that lacked adequate supporting documentation or evidence of supervisory review.
Yes, ma'am. When we're looking at internal controls, and that's where several of the findings, probably the first 10, 12-ish, are all internal control findings. Internal controls are basically a process where we're seeing checks and balances. We call it segregation of duties. We see something happens and then we verify that it was allowed, it was permitted, it was authorized, it was done correctly. When we're doing our audit, remember, we're coming in regardless of the time difference we have here. The audit is always done after the fact. Something happens, something changes, we need to see in that moment that it was approved at that time. So that's where you're gonna see adequate documentation is gonna appear a lot in these internal control findings, because that's the very nature of it. It's more that we're identifying the areas where it was. So it could have been a missing date. We didn't know when it was approved. It could be a missing signature. We didn't know who was approving what. It could be that some of the documentation just was not legible, readable, or didn't get provided to us in a timely fashion for us to say, okay, this is good. We asked for it once, we asked for it twice, and it showed up in between those two times. When we get to the third and fourth time, and then you find the records, whether it's an invoice that was missing and you have to call the vendor, auditor skepticism has to roll in where we ask, why wasn't this here? Why wasn't it documented at the time? Why did we have to wait for it so long? We have to question the validity of that as we express our opinion.
And that's why it's so important to do it right immediately.
Yes.
Right out the gate. So on that same one, it says certain entries affecting significant account balances. So they were prepared and posted without documented. So that's a significant things we're going through that were
Large dollar amounts, or through your key areas of your financials, be it your payroll, your cash, your accounts payable. Every financial statement has major and minor areas. The major areas that we look at had journal entries, adjustments, things going up and down, and we were just unable to be satisfied fully that those were approved and reasonable at the time in which they occurred.
As a board, sometimes we did not know any of this was going on. We were not told. Okay, now, from heading this day forward, what should we do as a board to make sure this is not like this?
I'm going to let Tim and Debbie speak to some of those specifics as we kind of roll this into the next couple of years. We were just recently re-engaged to audit next year's financials. So, and when I say next year, the 24-25. So realize we are still behind on doing this.
I'm afraid as bad as this is, it's gonna show up worse next year.
It's, I think, and I'll let them speak to some specifics, I think that there are some areas where it will get a little bit better, because during the 24-25, you did begin to implement, and we're very late in the year. A couple of the controls, a couple of the reconciliations, things like that were beginning to occur when Tim and Debbie came in. But a majority of these findings, just because of the timing, I mean, we're here issuing it now, you couldn't have corrected these for the 24-25 because nobody knew about them. We were doing these audit procedures after your 24-25. So it'll probably stay close to the same from the number of findings. You might have a few more and a few that come off just because of where Tim and Debbie are. As far as the financials, I haven't seen anything for the 24-25, so I can't speak to the audit side of it. But with the beginning fund balance of $200,000, I'm not optimistic.
Okay, the bank account reconciliation, 009.
Yes, ma'am. On page 3?
Yes.
Yes.
So we recommend that we work back to be prepared and review monthly. So what was the problem with them?
Some of them were not done accurately, so there were reconciling differences. In other words, the bank said one thing, you included some of the transactions, and then your general ledger said something different. So we're trying to see what was and was not captured in the financial statements themselves, because money either came in or went out and wasn't recorded or wasn't recorded in the right period. The other issue was they were done extremely late in relation to when they were supposed to occur. Typically, you get your bank statement anywhere from 15 to 30 days after the close of the month. So your January statement shows up sometime in February. Best practice is sometime in the month of February or March, the bank reconciliation gets performed. we were seeing some that were done significantly beyond that 30 to 60 day window. Some of them weren't done until close of the year.
So we're continuing to spend money and have no idea how much money we have.
Yes, ma'am.
It's just complete negligence.
Exactly.
I can't use that word.
I know.
I can.
So on page 5,
Yes, ma'am.
24-007, incomplete PEP data, could you explain what PEP
I
data
can try.
is?
Every year y'all are required to report certain information, and when we're talking about PEP data, we are talking primarily about, years of experience, pay level, whether the teachers are bachelor's degree, master's plus degree, or doctorate level, as well as their compensation, both estimated compensation and final actual compensation. Part of the requirements that we have from the Department of Education, the legislative auditor, is to obtain that report or something similar and tie it back to your records to say, you reported a teacher has 7 years of experience with a bachelor's degree and they were paid X dollar amount. We need to verify that report with the actual source documents within y'all's school system.
So that's our salary scale.
It forms off your salary scale. That is one of the source documents that we do look at. Some of your pay registers we also look at because the salary schedule is typically a starting point. There's often extra comp for maybe a coach, or some people are on sabbatical, so time is docked. There's all sorts of moving pieces in there. But we do go to a report that was submitted to the state, and we try to compare it to the source records. We tried multiple times to get that report to be able to begin pulling the data, and because it was so late in doing all of this, the numbers we were getting just weren't reconciled, and we kind of said, it's gonna be a finding, we're gonna have enough issues to begin spending everybody's time digging more to try to figure out what, when we know it's wrong, is just a reportable finding rather than testing.
So were those salaries less than they should be?
I can't say one way or the other. We didn't get that far into testing because the reports was just so skewed that it wasn't worth trying to get to find which way they go.
Looks like to me our records are just not properly kept.
Yes, sir.
So, one way we can fix this is making sure job descriptions have salaries on them that match the salary scale, and that's the actual salary that gets paid.
That's separate from the PEP finding. We can kind of address that in some of the other payroll findings and things of that nature. The PEP finding itself is that your computer system gets linked properly to the state's reporting system, whether that's through extract or how it works, kind of outside of my realm of the specifics of that. But basically, your system has to talk to the state because they need to know how many teachers you have, what level they're at, their experience. They have to do all the data analytics on that information. And it's meshing those two that we're required to test. So that's that element here that was missing.
That's my head wrapping. Is everybody clear with that? Do you have on page 6 the overdrafts? Like, how many overdrafts?
How many, no, but I can look through the financial, I have the dollar amount listed as a separate line item. In the general fund, the negative amount that we pulled was about $3 million.
In overdrafts?
Yes.
The board was never apprised of any of this. Nothing. And I had missed the meeting.
You're saying $3 million were in overdrafts?
It's unreconciled where the money, the bank never processed the negative, so it wasn't like you were hit with that. But when we did the reconciliations, looked at them, did our audit procedures, it appeared as if everything was clear, the bank would have been overdrawn by about $3 million.
Thank goodness for small papers.
No wonder they, the checks now for payroll. We had a business manager back during this time, apparently he was not doing his job. But we were not told that. We were not given any records concerning this at all.
And that was actually one of the findings that we noted was financial oversight report. When we were looking at minutes, when we were trying to determine what information was provided, we did note that there was a lack of that transparency, so we included it as a
So where it says we did not make the required continuing disclosures related to the outstanding bonds, this is on page 6.
Yes, ma'am. So that's a repeat finding. It's happened in the past. Y'all have, public debt. That debt has a requirement, both by state statute and federal regulation, that you report to basically a public trading site, think Dow Jones, stock market type of transaction. People can, y'all don't see it, but people could actively trade your debt on the open market. Because of that type of debt that you issue, which is extremely common in Louisiana, so it's nothing unique to Madison. Probably about 70% of my governments have that publicly traded debt, where y'all just get your dollar amount, you do your thing. But because of that, you're required to report this audit report to that website and post it within I think it's 7-month time frame. That gives you 6 months for us plus 1 month. I'm here today, so obviously this was not done within that time frame.
Obviously not. The thing wasn't filed in the time period either.
So the subsequent year, when we get in and do the 24-25, that finding will absolutely be repeats, because you just can't do it with the timeliness of what we're dealing with right now.
I agree. Pitiful, pitiful, honestly. I'm trying to bring this to light back in 2024. But no one wanted to listen to me. We needed an audit done, but nobody wanted to listen. Now I know why.
So still on page 6, it says the school board budgets were not properly amended during the year. So that's like as expenditures needed to change, it wasn't brought back to the board for the board to vote on those changes.
The process wasn't followed.
And the changes were made anyway.
Either the changes were made anyway, or they weren't done in percentages required.
What do you mean percentages?
State statute requires 5% variance. Anything above that be adjusted. So whether it was a timeliness on the board's part or being brought to y'all's attention, or when we did the final calculations, it varied by more than the 5%. It's kind of the same issue for us, that the budget wasn't properly amended to outdo that 5%.
The board knew nothing about this. I've been asked to say I'm a part of this board. Irritates me to no end.
So last page, can't say it won't be my last question, but the last of this, the short form. So it's saying that, I just read it, just trying to make sure I'm reading it properly in my head. It's like, we, spent money in grants, and grants, especially federal grants, have very, not just strings, cables attached to them, that they have to be, within the guidelines that the federal government says that money has, to spend those monies. and said that there were charges to these grants that was not consistently supported by the documented supervisory approval.
Yes, ma'am.
So there were things run through the grants that should not have been run through the grants?
No, so this is not a compliance finding. When we look at ESSER and we look at Title I, we look at two key elements. We look at internal controls over the federal rules and regulations governing that grant. And then we look at the compliances with those federal rules and regulations. Title I specifically states what you can and cannot spend the money on. We all know that, so when we're going through and looking at the expenditures, and I'm just gonna make up examples off the top of my head, you're allowed to buy pens and pencils with Title I. That's not a question with that type of money. When we did our testing, we were seeing those types of transactions, so they are allowed under the program. It is not a non-compliance issue. The tests that we performed had that internal control element to it as well. Were purchase orders or requisitions signed and approved in a timely manner? Were things posted and documented that, yes, the proper supervisors are signing off on this, saying, I agree that it's allowed to be spent, it's within budget, it's within compliances. So we did not have an issue with the compliance side of what we were seeing. Nothing appeared to be unallowable. You did have some over expenditures, which we never were. But that didn't drive a non-compliance. It drove an internal control deficiency for supervision and approval.
It's following the chain and the paper trail to make sure you're within the guidelines of what the grants require.
It's actually within the guidelines of what y'all require.
Yeah, okay,
So
you're right.
the grant doesn't stipulate internal controls beyond saying you must have internal controls. You, as a district, the board through basic policy and management through their day-to-day operations and their procedures indicate what thresholds need to be set when you use requisitions, purchase order, who has to sign, how they have to sign, what must be initialed, what must be signed. All of that is internal to the district. We get copies of those rules and regulations which all established when we test against them.
And that chain allows that if something's missing, when it hits a certain person, they go back and say, this needs this added,
Correct.
you know, and then that's how you get all your paperwork correct.
Correct. They stop the process in its tracks and say, wait, we need more.
Yeah, and they go find somebody and say, I need this.
Correct. Or they say, this may not be right.
Yeah.
That something is off with this, let's go back and see that we did it right, or that it is, in this case, it's grant money. That person should be able to stop and double check that we meet the controls, plus we meet the compliance.
And timeliness.
Yes, ma'am. Timeliness is key for all the audits that we do.
So for the next audit, we're gonna start out with minus.
Technically, positive 200, I'm not trying to put an overly optimistic spin on it, but it is not a negative number. So your 24-25 begins with a positive 200,000, which is way down from 4 million. And Tim, Debbie are gonna speak to where the 24-25 is projected. And y'all are now working in the 25-26 year, which means that this continues to roll and could have dire consequences
But
to
if this same thing happens again in
Then you
this
will
next
have
audit year, we're really gonna be in trouble.
Yes, ma'am.
We won't know till it's done.
I think that your team's gonna have a pretty good idea of where y'all will be before we get the final numbers this time, because we struggled to get everything, obviously, where, like, how late we were getting it. When you get past that, they'll have a good feel for the getting numbers, which are now midway through, and they'll have a feel for where 25-26 will end up. So you should, regardless of the timing of the audit, your team should have a good feeling for, or I was assuming the start of your 26-27 fiscal year. Any other questions?
Any other questions from the board?
Um,
Any other questions
Sure.
That's kind of a snip condition towards the audit. I can't remember which one it is, it's the top of the page.
Okay.
Page 4.
Page 4.
Yes, ma'am.
Okay, we'll go to page 4. Oh, the grant reconciliation,
Yes.
top of the page, okay.
Finding first. So this finding relates to internal control of grant reconciliations. Basically, in summary, what's going on here is y'all incur the expenditures, you go through the internal control process, and then you submit to the state government and say, we spent X amount this period on Title I, special ed, whatever the grant may be. Somebody makes sure that those are true and accurate. Somebody makes sure that those expenditures make it into the reporting portal for the state of Louisiana. And then the state has to pay you for those things. So you're making sure that you get the money in from the state and you're balancing all of that throughout. The other component here is kind of a circular back to the budgeting of it, is that you received and adopted a Title I budget. Not picking on Title I, it could be Title I ESSER, it could be special ed, it could be any of your grants. I'm just using that one for ease of discussion. When y'all incur expenditures, you have a budget that says you're only gonna spend X amount on salaries, X amount on materials and supplies. Somebody needs to be monitoring that on a regular basis to ensure that you don't have over expenditures, not just above the budget where an amendment might be made, but more than the award itself. So if Title I has only said you have only $1 million available to you, and you continue to spend without the reconciliations and end up spending $2 million, Title I will never pay you that extra $1 million. Your general fund absorbs those costs, either by moving them into the general fund expenditures, or basically the general fund transferring cash over to the Title I program. That's an accounting issue, and it really doesn't matter how or why we do that, but the general fund must absorb those over expenditures.
When the general fund is in the negative, it can't absorb anything.
That is correct. So that's the key components there in the grant reconciliations, and I believe that that's one of the key drivers of the big deficit that you have in the general fund. Several of those grants were not reconciled, several of them were either not requested, they weren't done timely, whatever the case may be, and when at the end of the period, the grantor says, I'm sorry, we can't pay you, your general fund has to absorb that from an accounting perspective, because the money has already left the school district. You already paid those employees, you already bought those supplies, you did it on the premise that you were going to be reimbursed by the grant, and they can't, so the general fund absorbs that cost.
And we had reimbursements that were not reimbursed.
You had some that were not reimbursed, you had some that were not spent timely. There were a significant number of reconciliations that had to be done, and balancing that had to be done to determine how much y'all are to be owed on some of the over expenditures, how much y'all can capture with carry forwards, and just how much had to be absorbed by the general fund. Debbie, any others that you would like me to go over?
I don't, not that I'm aware of. Do you have some others, Tim?
I've got a question. Might come to the podium. I happened to bring an audit report with me from the prior year, and kind of looking at, you go back to the general fund that he presented, I think page 2. On that, at the top of the page, the summary there, of course, total revenues were $13,406,000. And I happened to just, we got such a loss, I'm like, okay, where did the loss occur, or where were we so over budget and so forth on that? And I look back at the prior year audit report that Madison and did, and as far as revenues, the revenues are almost the same. This year, we've got $13,406 on the sheet in front of you. The year before, it was $13,321,000. So there's only $80,000 difference out of $13.4 million. It's almost identical revenues you received in both years. So the revenues was not the difference. The difference was in the expenses. And if I looked at your expenses this year, it's $17,463,000. See that number? And the $17,463,000 was $12,504,000. So the expenditures went up $5 million. And I'm kind of like shocked. And you know, I've been here many times and been shocked before, but this is kind of really shocking as to why the expenses would have got so out of hand that we went from 12 million, that's almost a 40% increase in expenses, from 12,500,000 to 17,500,000. That's a 40% increase in expenses.
It's crazy.
It is crazy.
Was that documented where this expenditure was in any of your paperwork?
It was not one specific transaction. It was a combination. It was a combination of several different things, some of it was the grant absorption, probably quite a bit of it. And then the instructional jumped from roughly $7 million to $11 million. So that's about $4 million of it. Your general admin went up about $500,000. Those are probably the two
So
largest.
we really don't know where that went.
And so some of that increase, as I mentioned when we started, we had a qualified opinion on the general fund. Some of it is because of that, primarily in the expenditure area. We saw the numbers, and when we were able to get the cash numbers balanced and some of the other testing that we did, we knew it was money that went out, but we weren't sure exactly where it went to. And so we qualified our opinion on those expenditures, saying, look, the total number is good, but we can't really say where up and down exactly that is going.
Because the last time you were here, this page didn't look bad.
No, ma'am. As Tim just said, it had an $800,000 problem.
Yeah, and that's why, you know, it was false. False security data.
If you remember, in the current year, one of the big places that we had to move money out of the federal program expenditures, because we overspent, was in ARPA money. Now that's for, at the end of 2024, was the deadline for spending the ARPA money. And I think what happened in that particular case, that the state was looking at it, that historically the school board has been very late in filing requisitions, filing reimbursement requests. And I think what happened, the state looked at it and says, hey, we only got 2 or 3 months left. If you don't spend the money, you're gonna lose it. So I think they apparently talked to the school board and shared that with them, and according to their records, you had spent the money. But as we've talked about before, you know, we had the situation where in ARPA, we spent a bunch of supplies, like $800,000 or $900,000.
What money are you saying? What word?
COVID money.
Oh, COVID.
COVID money.
Okay.
And in that particular year, we spent about $800,000, $900,000 on supplies. So we really used up that money, but we had to request the reimbursement from the state. So the state was looking at it and said, you got all this money, you have to spend it. And that's when this business with the stipends came along. And it's like, okay, you haven't spent your money, we'll just spend it on stipends. So they spent $900,000 on stipends. So at that point, we had like a fixed budget. We spent it on supplies, and used up our money, but we didn't report it that way to the state. So we came back and said, okay, well, we'll do stipends to spend the money. But at that point, then we doubled up the expenditures, and we wiped out our budget twice almost. And that's where I think it was about $1 million worth of expenditures, supplies that had to be moved to other programs or to the general fund. And so that's where part of this over expenditure is coming in. But
And if they had just been reconciled timely,
if it had been the requisition that had been turned in timely, the state would be on the same page as what the school board was, and we wouldn't have this issue. But we had issues the year before where the school board did not turn in costs that they were eligible to be reimbursed for. They didn't turn that into the state, and the general fund had to wind up absorbing it, and we lost that money. How much in probably this last year with the COVID money and all that we moved over? How much?
In 24, 25,
Right.
it's about 850,000.
That was about $850,000, and we had to go over and put in the general fund because we just didn't request the money properly for us with the state. The year before, we had a bunch of receivables outstanding that never got submitted to the state, and that had to be written off, meaning we had to go over and absorb it in the general fund. So that's where some of this is coming from, but That last item is in the 24-25 year. This going back to the 23-24 year, again, our expenses went up $5 million. And I think that's worth looking at to see what where those costs are and what happened on that. I know a couple of things happened that caused some of that, but $5 million increase in expense, 40% increase in expenses is a lot. And I think it's worth the time. I don't think we can kind of work with Matthew on his numbers and start there and kind of maybe come back at your next board meeting and kind of share why that went so crazy in that particular year. I think Debbie's back down in the $10 million range this year for the general fund expenditures. So I don't know what would have inflated it $5 million.
There's a pay material. Maybe a big pay material where that money was spent.
Maybe.
I think we can get a good handle as to where those overruns were.
So on the record, what does other assist?
Your other is going to be local dollars for whatever purpose, whether it is interest income or Section 16 monies. You're gonna have some state grants that are mixed into there that you get in the general fund. Whatever else, little piles of it, just get to come in, it all rolls into that $1.8 million.
Are there any other comments? Any comments from the public?
I have a question. Is this audit one of, like, the audits that are put on the state department that are made available for?
It should be.
Yes.
It should be on the legislative auditor's website. That's where I've found them before.
Yes, ma'am, it has been provided to the legislative auditor.
Mhm.
They decide when they actually publish it, so I didn't look before I came up here today to see if
It's
they
there.
officially published it or not.
It's there.
It's there? Okay, thank you.
Yeah, you just Google and then in a big place,
Yeah.
because our last one's there, because I've been there.
One other thing I would mention, so to be sure we're all on the same page, in this general fund only column for your audit, that includes the sales tax payments also.
Yes.
So, like later, we're gonna look at our general fund revised budget. It does not have sales tax in it. But when you do it for the audit report, those two funds go together. Also, the other thing about that is, like, you'll hear me talking about the annual financial report. They combine in it also. So that's the typical way that's reported. So you'll see, like, on this general fund column where it says sales tax, and you'll see revenue for that. When you look at my general fund budget here in a minute, my revision, that sales tax is not in there because I'm not looking at sales tax. I just didn't want y'all to get confused, but that is the way the audit would be done, okay? Just want to point that out so we stay on the same page. Thank you, Matthew.
Next item on our agenda, 2.2, is our fiscal administrator's report.
Okay. I don't have a report for y'all tonight. We have our official board meeting next Monday, and I'll provide some updates to y'all at that time.
On to our action items, section 3.1 is consider adoption of the revised 25-26 general fund budget. And this will be for this operating school year.
Okay. I've put this form at your desk there, your table. First, I'd like to point out, just like I was just talking about, This is the general fund only, it does not include other funds in it. It is something that we looked at a couple of times now in the last few meetings. And I told you at that point it was evolving and that we would be waiting to see the final audit numbers from the 23-24 audit for the general fund, which she's provided that to us tonight, okay? Now, with all the things that had to be done in 24-25, did you want to address any of that, Tim? Okay. Okay. I'm gonna let you talk about it so I can take them through my budget.
The President, and board members, superintendent, yes. We go over just a couple things as far as the current year. This audit is through the June 30th, 2024 year. We've got another year that's already passed now. We're in the 25-26 year. So we've got a gap in there between where we're at now and what David's going to be presenting as the budget for the current fiscal year and the last audit period, which began in June 30th, 2024. I might just mention as far as the findings and so forth, Deb and I kind of looked at those that are in this year's report, the 23-24 report. Unfortunately, most of those are going to repeat in the 24-25 year as far as Matthew's responsibility or task. Any comments that are in that year's report, which he just went over with you, you have to address them the next year and say those are cleared up, they're still an issue, etc. So again, we're thinking that most of those would not have been cleared up in the 24-25 year. Unfortunately, as you recall, we sort of got involved right in the month of April, and some of those things that had not been cleared up at that point. Hopefully the 25-26 year that we're now in, 2 years later, hopefully most of that will get cleared up this time around and so forth. But anyway, just to let you know that most of those comments and so forth are going to be repeats. Thank goodness, probably the biggest issue that caused problems for the school board was the late filing of these requisitions for federal expenditures, or no filing of requests for money reimbursement. And so the school board had to absorb through the general fund a lot of that cost. And so, as you know, since for the 24-25 year, Christy, a staff person, went through those with a fine-tooth comb and got reimbursements for every possible cost that we could. She had to move some costs from one federal program to another one. If it was allowable, if it wasn't allowable to one, but maybe it was allowable in the second program, she got reimbursements to the second program. And by the end of August, all the reimbursements to the school board for the federal programs had been submitted and had been collected. So that's a far cry from what it was from the previous years. I'm not sure if it was Chairman Matthew's tenure, but I know 1 year, the business manager was always in no big hurry to file the requisition and the request reimbursements. And 1 year, it was the reimbursement request was so late after year end that the auditor made us reverse those entries, saying we're not going to allow that. It's too late to be requesting this. If you get it, great, you can report as income in the future. But as of this point, I don't feel comfortable having those receivables on the books because we think it's too late. So historically, you've had that issue. I'm just saying for the 24-25 year, there is no issue. We've got all the money that you're entitled to was requested and was collected before the end of August. So within a couple months of year end, all of that money was brought up. It certainly helped on the cash flow and kind of prevented some months where we would have been really in dire shape as far as the cash collections and so forth. So I think Debbie's going to go over her budget here in a minute and kind of talk about the way it's going to look. Again, Mr. Matthew has about $300,000 fund balance that's rolling into the 24-25 year. The year before, it was almost, what, $4.5 million or something was what was rolling into the year. So during that 23-24 year that he talked about, your fund balance went from $4.3 million down to $300,000. And that's what that $4 million loss that you had in that year is what caused your fund balance to go down to it. As we mentioned several times back, I think it's going to get worse before it gets better. And your 24-25 fiscal year it's definitely gonna be showing a loss for the year, and it's gonna pull that fund balance of $300,000. It's gonna pull it down close to $800,000 deficit, or even $1 million negative fund balance at the end of June of 2025 is what is being projected. So, and then hopefully in this year we'll get back on track. But anyway, that's the way it's looking. And in a 2-year period, you're going to go from $4.4 million positive balance to probably close to $1 million deficit balance. So, share that news with you, but that's kind of what I see from reading the reports and so forth, is what you can kind of expect going forward. And hopefully we can get the 24-25 year already completed in the next few months and be back on track at the end of June of this year to get back to filing your reports and stuff time, or having August completed time and back on track and so forth. But anyway, there's quite a financial challenge yet to be done, to be accomplished, to get us back where we need to be financially.
Okay, as Tim mentioned, we started out with about a $300,000 fund balance for the 24-25 year. Then we're expecting, and I've included in this budget for 25-26, a beginning fund balance for 25-26 as a negative $768,965. Now that is clearly what is on our trial balance at this time. You know, there's several areas that we will be working that can change that just a little bit, one way or another. But we're still working on those items to get to Matthew so he can get completed with the 24-25 school year. But it doesn't look good. I'm going to take you through this real quickly, again, because we've been through it several times already, except we did not have those final numbers, okay? So, revenues, we're projecting $9,763,669 for the 25-26 school year. That includes a reduction in MFP based on, we're down 11 students. So we've made a tentative adjustment there to cover that. Also, there was reduction in the ad valorem taxes. We got all our paperwork from the assessor. That was going to be down a little bit. And also, this includes the 1% that they'll be adding to those numbers also. So, nothing expected to change greatly in the revenues, you know, maybe up a little, down a little. Those will be any changes will be in future revisions, which I look for us to have at least one more before year end, possibly two. Expenditures. And again, I talked with y'all earlier about a lot of coding being incorrect. We had a lot of coding. Some of these numbers look skewed from our beginning budget to our revision this time because we just had last year's to work on. And when we initially started with this, we didn't realize there was as much bad coding as it was. And now by bad coding, I mean some things that were, they were truly expenditures, but they were just not grouped into the right area. So we had to move them into the right area, which kind of changes the numbers. So one number may have grown and one number may have been reduced. But we've done that here and projected our revision as of February 2026 for each of those areas. Again, as those things evolve, I'll be keeping you up to date. Also, some of the things that were in last year were one-time things. There were things that had to be moved into last year's expenditures, and they did impact our prior year. Of course, looking at that data has impacted this year's data as we're going forward for projections. Once those projections get more and more solid, then I'll continue to provide this budget to adapt to that. But you can see, based on where we're at with the expenditures, we have a deficit of revenues, expenditures, over revenues, let me get that right, of $1.6 million. But then we're adding into that $550,000 of indirect costs, which there again, we got a huge hit. Last year, we had $1.5 million in indirect costs. Well, not so, because Esser's gone. The operating loan, which we got ran for $2.5 million, initially in this budget, when we talked about it earlier, I just had the 1.5, which is the draw that we have taken. Now, that's all we've taken at this point. We also still have the 2 CDs in place. We've not touched those. You know, the board authorized us to do something if we needed to. We didn't have to, so they're still in place also. However, we also have to pay school lunch back. And this year it's $437,500. Next year it will be $437,500 to reimburse them for costs that general fund took from them to make payroll, to the payroll account. So once the financing sources are included, that gives us an ending excess of $935,000, which then, taking into account the ending balance for 2025, which again remains to be seen finalized when we do our 24-25 audit, leaves us with only $167,000 positive balance for this coming 25-26 year. Now, as you can see clearly, we're not done. We've got more work to do. There are still several things that we're working on that will have some impact. Again, in my reports, I'll be revealing that to you as we work along with that. But keep in mind, we've also got to pay this $2.5 million back. So that's, you know, we're going to be starting that too soon. So just please be aware that this is a evolving revised budget. And as more things come to light, I'll bring them to you. But there's more work to be done. We're going to have to do some work for the years out this year, and we're going to have to look at some things for next year. It's just anyway. It's top that off with. We have facilities that need help. We've got a lot of problems with our buildings, and you know, there's got to be money to deal with those things too. So, y'all have any questions? Tim, is there anything you feel like I should bring out that you had, you like to say?
Just say that, accounting-wise, we may have this recorded correctly as far as the operating transfer in, but to keep this from going in a big deficit here, we've got reflected here that $2.5 million loan that we're receiving, but as you know, you gotta pay that back. So the way this report is showing, it's almost like that's income to us. Well, is it income to us? You gotta pay it back, so it's not really income to us. So to me, even if county says you should include that in this report, in my mind, I would say you would need to take that out because we've got to repay that. So if you kind of inflate the income in this particular case, then over the next 2 years, as that's getting paid back, or the next 3 or 4 years, as that gets paid back, you're going to keep reducing your fund balance to pay that back and so forth. So again, I think to me, as far as these numbers, I would look at the excess revenues over expenditures. It's in the middle of the page, the $1.6 million, and then take and make maybe a mental note of the indirect costs that we're going to be receiving and the operating transfers out. And to me, you really got about $1.5 million loss is what you're going to have for this year. Because again, the $2.5 million, they got to pay it back. So to me, that's not income.
Well, it may give you false security that that's our money.
Right.
It's not, it's got to be repaid.
Right. And you can kind of look at it the same way. If you look at your bank account, you know, we were running pretty close to even or pretty close to a small balance, $200,000 or $300,000 in our general fund. We put $1.5 million in it. You look at the balance then, it's $1.7 million. It's like, oh great, we got lots of money, but we got to pay $1.5 million back. So it's like, no, it's just a temporary loan, and it's not really, it's not income. And we're going to use it to get us through the crunch and so forth. But we got to pay it back. Once they get paid back, we're back down to $200,000 or $300,000. balance that we got in our checking account. So that same way I was looking at $2.5 million as shown on this, budget line.
A temporary fix. Of course, you have to have a balanced budget, so. So, any other questions?
Certainly appreciate y'all explaining this to us.
Are there any comments from the public?
I've got a question. When you're talking about your fiscal year, y'all run, January 1st through December 31st, or you go
No,
July?
sir. It's an
July.
academic, it's from July
Or
1 to June
June
30th.
30th, okay, all right.
Yes, sir, it's academic school
And
year.
if I heard this gentleman saying your audit report for 2024 through 2025 will be, I guess, completed sometime the next 2 or 3 months and reported back to the board.
Correct.
So hopefully you'll be on track rather than being behind the 8 ball pretty soon.
We won't be in arrears trying to talk about information
Yeah,
anymore.
and I have a question, of course, having worked in regulatory compliance and fraud for 30 years at the hospital, when y'all talk about coding, what do y'all, anytime that there's some type of transaction, is there a certain code that you use? Does it sound like I heard that on a couple of occasions?
We have a very extensive chart of accounts that is dictated by the state of Louisiana, and it's called a lap guide. No pun intended, but it actually tells you what certain revenues should be coded to,
Yeah.
and expenditures also. And
Okay.
talking about the coding, if, you know, just so it's clear on what I was talking about, for instance, we had some employees that actually work with career and technical, and we discovered they hadn't been coded to that. So we were coming up, and actually that's one of the things that we need to report to the state is what we're spending on career and technical is a separate thing that we have to do. But somehow those folks were never coded, or in the years we looked at, were never coded to career and technical. So it was still an expenditure, we just moved it into the right category.
So that leads to another question. Who does the coding? Is it somebody in high leadership, a clerical person, or a financial officer?
Well, there's been several in the past, and we've pulled that in. We've also done training. We've sat down with cheat sheets, so they've got a condensed
Sure.
form to look at instead of, because the lab guide's pretty extensive. It's a 3-ring binder, but it, you know, gives all the details that you need, but we tried to meet with them, and Christy made a cheat sheet so they could have it and look at it real quickly.
Sure.
And get there. So that's something we're working on.
Okay,
It still needs to evolve, but it's getting better.
Okay, all right.
Any other comments? Excuse me, I didn't do that. And so this is an action item. So is there a motion to consider the adoption of the revised 25-26 general fund budget?
I move that we adopt the revised 25-26 budget.
Second.
It's been moved by Ms. Hargrave and seconded by Ms. Paula Hamilton to consider the adoption of the revised 25-26 general fund budget. All in favor of adopting this budget? Any opposed? Motion carries. Action item 3.2 is consider the adoption of the 24-25 compliance questionnaire. Reverend Fountain is, his wife is ill and he's not here, so I've signed in his stead because I was vice president at the time, Dr. Butler and, Reverend Fountain have completed the questionnaire, so we have that ready to, we submit this to the state. Dr. Butler, do you have any comments on that?
We'll provide it to the auditor.
Okay, so give it to Matthew? Okay, well, it's signed and ready. Okay, do we vote on that? That's an action?
Yes, yes.
Okay. So, any motions to consider the adoption of the questionnaire? The compliance questionnaire?
I move that we adopted the compliance questionnaire.
I second.
Ms. Hargrave has made a motion to adopt the 24-25 compliance questionnaire with, Mr. Wilson seconding. All in favor of adoption of the questionnaire? Any opposed? Motion carries. And our last item is adjournment.
Make a motion that we adjourn.